Let's go live to the trading desk. I've got Victor Adair here. I've got a goofy coming up in a few minutes' time, but first, there's just so much happening. I mean, the markets have been reacting, Victor, very strongly since that Trump victory, November 8th, but I want to focus on a couple, and let me start with you and get a quick take on the interest rates, because there's been a dramatic shift.
We've had a very sharp rise in bond yields certainly since Trump was elected, but it goes back to July. And we've had a 35-year bull market in bonds from 1981 to July of this year. In July, just after Brexit, $12 trillion worth of bonds trading at negative yields. We'd never had interest rates that low. Okay, then they started to rise. And, of course, their market had been hugely levered in bonds when we were making that low in yield. So the setback, the fall we've seen in bond prices has been dramatic. One of the global gauges that I pay attention to says it's the worst month like in 20-some years, if not longer. We've lost about $1.7 trillion worth of value in the bond market in the month of November alone. So we've had this very sharp setback. But let me put this in perspective as well. The decline that we've seen here since July is about the same size as the decline we saw back in 2012 into 13. Bond prices found a low and then rallied on, made new all-time highs since then. But there has been a huge move in bonds. There's been a lot of money that's been invested in bonds, has fled that market, gone elsewhere, certainly gone into the stock market, and clearly, it's very, very much in the news, particularly since the election of Donald Trump.
Hey, one more, Vic. Again, reiterate the change in that U.S. 10-year bond, interest rate that people.
Sure, Mike. When we were having those historic lows, just in the early part of July, the benchmark U.S. 10-year bond yield was 1.3%. This week, it hit a high of about 2.45. That's a very big move in a very short period of time. It kind of goes to the question, in a way, is the Trump mania market moves that we've seen in currencies, in stocks, in interest rates, is it overdone? My short answer is, yeah, I think so short term because it's been so dramatic, but I also think we made a sea change with the election of Donald Trump.
I got to get to crude oil, and very difficult for some people. They may be aware that there was an agreement with OPEC to cut production, starting in January, but there'd also be a lot of people who are playing that market to go down who were forced to cover, because, man, did we ever get a sharp move.
Yeah, we did. I mean, as I said last week on the show, if OPEC did not come up with some sort of a believable, sustainable production cutback, we would have seen the bottom fall out of the crude oil market. Maybe I'm exaggerating, but it's radio, right? I'll tell you what, on Wednesday, when they made the announcement in Vienna, the futures volumes, there's two major contracts we trade, WTI, which you hear about on the news all the time, and Brent. The futures volumes were absolutely huge. They represented 45 days worth of global production. That's roughly 100 million barrels a day for 45 years. That was the volume. So we had this huge surge in volume, huge jump in open interest, a weekly key reversal up in crude oil. What does that tell me? It tells me there has been massive speculative buying, call it bottom picking, in the oil market and oil-related stocks.
So we bounce up toward that 52. That was that high going back. I can't remember when that bounce was before, but that first bounce into the crude coming out of that $28, $26, $28, $30 low. Is there any way you can tell at this point if it's sustainable? Like, would you be playing this to go up further, given it had big volume, it breaks, it breaks up very quickly?
Well, I'll tell you what I'm doing. I mean, Drew and I, and by the way, I really pay attention to Joseph Schachter. He's just been so good. I subscribe to see his monthly letters and that sort of thing, talk to him, swap emails. We had owned puts on crude. We had covered them just before the OPEC announcement. I didn't see any, the date of the OPEC announcement, didn't see any point in trying to guess what they were going to do. We've had this tremendous rally. I am still of the view that what I call a supply-demand inventory story is bearish for crude oil. I don't have a position on. I'm looking to see if this rally doesn't run out of steam, and then we would look at reshorting it again. And, of course, a subset of that, Mike, as the oil market goes, in large part, so does the Canadian dollar.
Well, we'll be here to chronicle it very closely. Great stuff, Victor, as always. Many thanks.
Okay, have a great weekend, Mike.